Performing stocks. So what a difference a day makes, Pete McGuire. You've already been mentioned. You are with us in the studio this morning.
Good morning,
Your
Brooke.
take on what's happening then?
Oh, look, it's terribly volatile. And when you think about what happened on Monday, you saw the silver price down the best part of 5% in the intraday trading out of Asia before Europe opened, or of course, America. So that whole complex is really very, very volatile. And look, it's great trading opportunities if you're on the right side of the ledger. And there's certainly plenty of interest in it. But I think that where it's going at the moment, people are looking at higher yielding equities. They're looking at different markets to trade, and certainly the FX space and equity markets seem to be the place to be.
How do you play lower for longer? Because if Ben Bernanke does underscore there's going to be no change, doesn't he implicitly say this economy is still on effectively trainer wheels?
Sure.
And doesn't
life
that,
support, one could say.
I thought you might go down that route as well. Doesn't that underscore the need to have this in your portfolio?
Oh, certainly. And I mean, it's never been thought of being taken out. And you've only got to put your mind back the best part of a decade, what's happened in that period of time, from $300 and $400 an ounce all the way through to nearly $2,000. It's still something to hold into your, in your portfolio, and I think it will be there for another 4 or 5 years at least. But it just depends on what's happening. I mean, the front page of The Economist...
Let's hold it up.
And
get it on camera. Let's come on, Tim. Let's do it. Close up. You keep talking. And we'll go close.
Yeah. Well, the front page of The Economist, really, it just shows what Abe is doing as far as what the Japanese economy. And really, it's front and centre as far as a recovery picture. The Nikkei has risen the best part of 6,000 points since around about October.
They can't read that. Is it a bird? Is it a plane?
No, it's Japan.
There you go.
And
I'm a good model
that just
too.
gives us all an idea of that huge recovery across the Asia and certainly Japan, and the weakening of the yen. That's been a whole central bank glory trade. As far as retail land, I mean, who would have thought what would, the best part of 25%, 30% depreciation, and that's been where the smart money has found its home. So, they've moved from the that traditionally volatile commod space. I think they've found FX and certainly Japanese equities the place to trade.
What's underpinning it, though, short of the Abenomics story that we were just seeing there? Because take that away, fundamentally, you're saying 110 by year end versus greenback.
But they won't take it away, will they?
I don't think they will, and it's running at around about 103, nearly 103 at the moment. So it hasn't got a long way to travel, and I think in that next 6 to 7 months, it's every possibility that you probably take that headline number out. One needs to be conscious. You've got return of Japanese consumer.
Do you really see that?
Oh, well, they're talking as far as, sales are certainly up.
Right.
So there's a general...
Off a pretty low base, right?
Of course it is. I mean, they've been hammered. But, that's where it goes to Japanese, as far as currency fluctuations. You only got to put your mind back nearly 30 years, and the yen was at 260, 270 to the US dollar, and then it went all the way through to 75. So that really crimped that whole economy. And we're talking about, up until only a couple of years ago, the second largest economy in the world. So that's where I think a lot of the smart money has certainly found a home in the last 6 to 8 months.
I'm just thinking about, when you take it back to the consumer level, even overnight in the US, we've seen consumer confidence in the United States kind of booming again. Do you think in terms of the way markets work, you start to get that hometown bias start to come back home? Once they start to see things picking up, you get a lot of US dollars coming back home and away from overseas?
Yeah, sure, repatriating. There's no doubt about it. Those large US companies, and you talk about the S&P, it's just been a growth story really for the last 4 years. Like it or not, the damn thing's up 1,000 points as far as the S&P 500, from 650, 680 all the way through to nearly 1,700 now. So it's been very, very strong. And I don't think that storyline's going to change. It's the re-inflation of asset prices across the globe, and central bankers, that's been their whole initiative and really a mindset.
Yep.
What's the appeal to driving a tractor in the US these days?
The appeal is that with technology, and we think of farmland as being, a small ma and pa operations going back 15, 20 years ago. Now, technology, and you've got satellite imaging as far as planting, you've got 48-row harvesters that hit about $350,000 a piece. So huge capital expenditure. And put your mind back just a fraction before your time, 1900 to 1920.
Oh, you're too kind.
Land prices in US farmland rose 70%, but by 1940 they were back to 1900 levels. We've seen huge gains in the last decade as far as farm costings for land in US, but I think this time it's different. And I think it's different for the couple of reasons. One, technology, better harvest, but certainly you've got so much more consumption and increase as far as population base and animal feed for as far as protein. So I think that the storyline is strong and very much a positive for US farmland. I think that will flow on to where we're going here.
What's the most, I suppose, lucrative commodity in your sights because of that to make a trade on, potentially between, you know, now and the end of the year?
I'm not really worried about corn because we're in backwardation. What that means for the viewers, it's trading at about $6.30, $6.50 for the current month, but by December it's trading at the best part about $1 discount, about $5.20, $5.30. So I'm not interested in that corn trade. I'm more interested in, from a geopolitical stance, what the situation is in the Middle East and Syria. So I think as the temperatures rise, so will the frustrations, and I'm still very, very conscious of that whole issue or landscape really creating some turbulence over the months ahead.
Is that to you a bigger threat than, say, Korea or Iran? Syria is the powder keg.
Syria is Iran.
Okay.
I think that's
in
from
drag.
Hezbollah.
Okay.
I don't know, yeah, probably in drag, yeah.
However you like to call it.
Thanks, Pete. We've got to go to this break. Thank you so much. City downgrades. It's View on Australian equities, though. George Baburis joins us next hour.